Now back to Inside Real Estate. Here's Mike the Realtor.
Hey folks, we are back. InsideRealEstateRadio.com is the website. InsideRealEstateRadio.com is the website. That was a conversation with Deborah Crombie, author of Garden of Lamentations, which was 17th in her series. And I had a great conversation with her. By the way, she's local here in DFW, so check her out, DeborahCrombie.com. And we are working on getting our next guest on the line, of which is John Guandolo. This guy, former special operator, former FBI counterterrorism expert. He is an author of a couple of books as well as co-author. And then also he operates UnderstandingTheThreat.com. UnderstandingTheThreat.com. And so we're working on trying to get him on the air, get him dialed in here. The book that I read, he released this book 3 years ago in 2013. The book is Raising a Jihadi Generation, and it's understanding the Muslim Brotherhood movement in America. And it's a short book. It's really written as a handbook, and he says clearly on the cover, handbook for law enforcement, intelligence, and military professionals. And so the interesting thing about this is that although he wrote this book for law enforcement, really everybody should read this. So it looks like we are having a little bit of trouble getting him on the line. So what we're going to do is we're going to go and skip on to our next segment, and then we'll maybe come back to this when we can get him on the line later in the show. But folks, stay tuned for this because we got a lot of fun stuff to talk about with John Guandolo. So we shall roll into business now.
Business.
Easy segue there, right? Terrorism, business.
There you go.
You know,
hand in hand.
Hand in hand. They go.
In some instances, they do.
That is true, actually, more so than people know. What do you say, Terry? Let's get into some mortgage talk and some business talk.
I'm ready.
Let's rock and roll.
I'm ready.
We've been talking about credit a lot lately.
Yeah. And, we're not talking about that today.
It's very important, but
yes,
what else we got?
Well, I thought I'd just kind of go over some do's and don'ts when you go to buy a house. So
Very
the first do is to give me a call. We've talked about that so many times.
Yes.
Start the process with your pre-qualification.
Yep.
We have to look at so many things to make sure it's not just looking at your credit. You know, your credit may be fine, but there are so many other aspects that go into you purchasing a home other than just that credit score. So contact me. Let's take a look at credit. Let's take a look at everything else. The second thing that you need to do is once we send you that list of items that we need it back quickly. We need to take a look at, because, we ask all the right questions when we're taking our application, but sometimes customers don't know the right answers. We'll ask them about what they filed on their tax returns. Did you have any unreimbursed business expenses? Do you have any side jobs that maybe you showed a loss or a gain on? And if they have someone that does their taxes for them, they don't know. So we need to take a look at all those. So we're going to request all of your income documents, all your assets, your liabilities, all the expenses that you have. We're going to take a look at the whole picture, the whole package. Right. So it's important to get those documents back to us as quickly as you can.
Yes. Don't slack off on getting the documents back. And the thought, the thing is sometimes people just think, I've got a good credit score and I'm qualified. I'm just good. They don't, they don't really need it.
Right.
I gave them one page that they wanted.
Right.
Look, it's not, we're just asking for it to be a pain in the butt. These documents are
really
required and we need it. So you want the loan, we need these documents, need to get them into us.
Right. And we don't want to have a summary of your assets. We need to see the actual statements for your assets.
Yeah.
The underwriter is going to, and here's kind of a goofy one that gets us sometimes, is when we ask for your bank statement, with most bank statements, there's a page in there. I don't know why they do it, but it says this page intentionally left blank.
Yeah.
Guess what? I need that page too.
Got to have that one. Yep.
Because if the bank, I know, isn't that silly? Why do they put that in there? If it's blank, don't just have one page less.
Exactly.
Save a tree.
Save it.
So, but anyway, when an underwriter takes a look at that bank statement, when it says page 1 of 5, 2 of 5, she wants to see all 5 pages so that we make sure that we're not trying to cover something up is basically what we're looking for.
Right.
So very specific there, but when we're asking for the document, get us the whole document. Next, be sure that all existing loans and credit accounts are kept up to date. Just because we pulled your credit today doesn't mean we won't have to pull your credit again. So make sure you make your payments on time. Okay?
Right.
Be flexible when the appraiser comes out with your time and because we want to get that appraisal report back as quickly as possible. So be kind of flexible with if you're going out for the appraisal to make his schedule, not necessarily yours.
Right. Absolutely.
So be a little flexible there. Let us know if there are any fluctuations in your financial situation, any job changes. You would be surprised, Mike. We go to closing. We go to do an employment verification. I've had this happen once before, not very often, but they quit their job.
Mm-hmm.
Well, but I'm going to start another job in 30 days. No. You have to have the same job today that you qualified for the loan for.
That's right.
So be sure and let us know if there's any changes. If you're even considering a different job opportunity, let's talk about it because that can really play a big role in whether you get the house or not. If you're a full-time W-2 salaried employee now and you're considering a job that is a good portion of your income is going to come from commission, but you're not used to getting commission, guess what? You just took a pay cut and now you don't qualify for the loan.
Right.
So be sure and let us know any of those things.
Yeah, for sure.
But if you go from the basically being a COO of one company to a COO of another company,
it's usually okay. You're usually fine, but still, I want them to talk to me about it so that I can take a look and make sure that everything's going to be good. Because a lot of times, people will move from one job to another because it's a better opportunity, but some of that opportunity comes in overtimes, commissions, bonuses, where if you didn't have them before, I can't use them now.
Yeah.
Okay? So be sure and let us know about that.
For sure.
And then things to avoid. Don't open any lines of credit. We've talked about this. Mm-hmm. When you go to the airport, when we were talking about that the other day, a couple of weeks ago, don't buy the T-shirt or whatever it is that you get if they pull your credit. Don't do that.
Right.
Don't open any lines of credit.
Please.
While we're in the process. Don't pay off any collection items unless I tell you to.
Unless you discuss it. Yeah.
Unless we discuss it. Because that can hurt your credit. That can lower that score. Mm-hmm. Believe it or not, if you update that credit account with a newer last date of activity because you've now paid it, that could lower your credit score.
Yep.
So we don't want that. So just don't make any sudden moves. No sudden moves.
Yes, please.
Unless you talk to me. Don't deposit any large checks that you may get into your bank account without talking to me. Don't transfer any money from, a credit card that you get to take money from. Don't do that and put it in your account without talking to me. Basically, I am your master.
That is correct.
For 30 days.
You are the commander and master.
Yes. What's that movie? I am your captain. Look at me.
That is right.
We do that all the time at home. But that's the truth. You need to talk to me about any moves that you make during that process because we just want to make sure that it's not going to mess anything up.
Well, it's true because there's so many things that people do and they just don't think about it. Oh, that won't bother anything. That won't bother anything. Folks, we're still in an environment that is very regulated as far as it goes to mortgage. So there's a lot of documentation that we need, and there's a lot of things that are going to be potential to screw you up.
Yes.
As the bottom line. So talk to Terri about it, and it could be something that's you don't even think, like paying off.
Exactly.
An old debt. You're like, I paid off an old debt. Great.
Yeah, that'll be great.
That'd
She'll
be great.
love that.
Right. But actually, it doesn't work out so well.
Yeah.
So we need to talk about all those things with Miss Terri.
Right.
And get her approval.
That's right. And I'm ready. I'm ready to get your approval. So, and we've talked about this too before. If right now isn't the time for you to get that approval, we'll get a game plan together so that 6 months, a year, however long it might take for us to get the credit where we need it to be, we've got ideas. We can think outside the box and get a game plan going for you so that we will be ready in a few months.
Yeah, absolutely. By the way, her website, TerriWaggoner.com, TerriWaggoner.com. And folks, whether it's cash out, Texas cash out, refinance, because interest rates are still great. If you're paying 6%, 7%, 5.5%, from way back when, and you haven't refinanced yet, well, you need to refinance. Call Terri. She'll get that taken care of for you as well.
Another thing that we're seeing in refinances right now is because our property values have gone up so much over the last year or so, that if you're in a mortgage right now that has mortgage insurance, we might be able to refinance you, keep the interest rate somewhat close to what you have, but because your value is so much higher, maybe we take you from an FHA to a conventional with no mortgage insurance. Now your payment's less, even though your interest rate isn't considerably less.
Right.
But because you're getting rid of that mortgage insurance, it's a good thing.
Yeah, that's a great point. But yeah, because even if your interest rate doesn't necessarily go down too much, that's a great point because of the value's gone up, the equity's there.
Right.
Great point.
Right. We've done a few of those.
Yeah.
So, yeah, take a look at that or give me a call and let me take a look at it for you. I don't mind doing that mortgage analysis, even if it doesn't pan out that it's going to save you any money. I'll tell you that too.
Right.
I won't just refinance you for no particular reason. Yeah. It's going to have to be a benefit to you before we move forward.
And by the way, folks, what she just said is hard to find in the industry. She just said, I'm not going to write a refinance for you just to write it.
Right, just so that I have it on my
She's not in the
books.
business of doing that. She's looking out for you, and that's rare in the industry, folks. So, hey, TerriWaggoner.com is the website.
Thank you.
Talk to her. Folks, we're going to take a short break. Come on back.